Okay, so thank you everybody for joining us for our Setting Up Your General Ledger webinar. What we're going to do today is we're going to start with going over some of the fundamentals of the general ledger, of the chart of accounts. So let me bring up this document, and some of you guys might recognize this. We actually have this document. Can you guys see that one okay?
Yes.
Okay, you might have seen this document. We talked about this, kind of the chart of accounts and just the basics of a chart of accounts. I think it was February and March, just to get a kind of a global understanding. So I thought we'd just start with reviewing the categories of these numbers, because we're going to go over every single general ledger account number that we have in MaxxTraxx, talking about how you set up that account, you know, what methodology, what information you put in that account, where do you actually gather that setup amount, the starting balance, and talk about how the system posts transactions in and out of those accounts all day long. So that way you'll kind of get an understanding of what's happening behind the scenes. And if you ever need to fix anything or make an adjustment, you'll kind of understand what's going in there and what isn't. So let's just start with the very top are our 10,000 accounts. And those are our asset accounts. And those are things that, you know, tangibly we have, are the money that we have in the cash drawer, any payments that we have to go to the bank, any money we have in the bank, any money that somebody owes us, like customer accounts or accounts receivable. Inventory, that's certainly an asset if you guys were ever to sell that. Your equipment, your building, anything in there. So these are the 10,000 accounts, and we'll talk about these, like I said, as when we go through each individual account. The 20,000 accounts are the liabilities, and these are the bills that we owe. We have parts bills to, you know, WorldPact and all the dealers, Napa, anybody that you buy parts from, CarQuest. And then we have our credit card bills. So really, these APs, or accounts payable, are just things that we owe to people. We also have lines of credit or loans, and those are usually called payables or notes. And then, of course, the other big liability that we always have if we have employees are payroll. So whenever you run payroll, you're withholding part of their money out of their paycheck to give to the government. And, of course, you have to pay your payroll taxes, your portion of that tax payment to the government, your 941, your unemployment, your state income tax. So these are, again, your liabilities, things that you owe to somebody else. Then we have the 30,000 accounts, and these are capital. This is your initial investment in your business. Any money that you take out as an owner draw, that's considered capital, or money that you put in. That would be stock also. This is also if you're a corporation. And retained earnings from previous years. Capital is considered, you know, the worth that you've taken out of the business since it started. So that could be last year's retained earnings. And that is an automated transaction that gets posted to your general ledger once you pass your fiscal year start date, which for most people is January 1st. So that's a little bit about these accounts. And these are the accounts that we set up in the beginning. Any questions? I'm going to stop every few minutes and see if we have any questions on that.
No question.
Good on those? Go ahead. Tony, did you have a question?
No, we don't have any questions.
Okay, I'm sorry. Okay, so now the 40,000, 50,000, and 60,000 accounts. These numbers are all generated in your everyday business when you're writing repair orders or entering in payments that you've received. Actually, just really, anytime you make a sale, that's considered income. So if you have part sales, you sell, you know, parts, labor, and sublet and supply charges on a repair order, or parts if you sell it on a parts ticket over the parts counter, that's all the income. And that posts to your general ledger whenever you actually post and pay one of those invoices. Also, interest earned. If you get a monthly bank statement, a lot of times you'll get interest will be reported on there, and you'll enter that in. We'll talk a little bit about how that's put into the system. But that's all income. So that these numbers happen when you transact your normal business. Now, cost of goods, when you sell a part, you are actually taking one of your assets. It's something that you have in your hand, something that you own, and you're actually expensing it as a cost of doing business, the cost of your goods sold whenever you close that RO. When you close and post that repair order, that's when it moves that inventory on that RO from an asset down to a cost of goods. And if you ever do inventory for when you're doing regular physical inventory at the end of the year, or you go to sell a part and you're like, shoot, my inventory says I have one and I really don't have any, and you make an inventory adjustment in the part record, that again is considered a cost of good, and then it's expensed. And then the 60,000 accounts, which this is probably the largest section because you can slice and dice your expenses a cajillion different ways. This is pretty much everything you need to do to run your business. This is your payroll, your, when you pay wages or your flat rate commission, rent or lease for your building, if you pay interest on any of your loans, insurance, advertising. I mean, I just have a small little selection of expenses that you'll see when we go over each account. You can really put in as many extra ones if you want, depending on how you want to track your expenses. For example, advertising, you could have advertising print, advertising internet, advertising radio, advertising television, advertising, whatever. You can break that all down. So there's often a whole plethora of 60,000 accounts, and a lot of people do customization in this area of the system. And again, these are created whenever you pay a bill, whenever you write a check. So these are the ones that are kind of happen throughout your day as you conduct business. And actually your assets really just move around because you usually start with cash and then you buy parts. So you're really moving from cash to inventory. So they kind of stay grouped up here. But I just wanted to give you kind of a quick little outline of what is in each number grouping. So again, assets, liabilities, and capital, kind of your top portion. And then you have your income, cost of goods, and your expenses. Any questions on this before we start going through each individual account?
No.
We good on that? Okay. So let's go ahead and we'll get out of here. And let's take a look at the program. So just by clicking on accounting on the menu bar, we can click on the chart of accounts. And here is this huge chart of accounts. I mean, this really does go on and on and on. So we're going to focus a lot of detail on the 10,000 accounts and the 20,000 accounts. The 10,000 accounts, again, are your assets, and the 20,000 accounts are your liabilities. This is what you owe people. And then we're going to kind of just talk more as a grouping of, well, we'll talk basically about your capital accounts, which are your 30,000 accounts, pretty basic, not a lot of those. But then we're just going to talk in general about the 40,000 accounts, which is your income, the 50,000 accounts, which is your cost of goods, and your 60,000 accounts, which are your expenses. So starting with petty cash, I know there's a few MaxxTraxx users on the call that used to use our DOS version. We had a petty cash that we used pretty much on a daily basis. And in MaxxTraxx, it made sense. In MaxxTraxx, we really don't have a clean way to put money in and out of this petty cash account. So frankly, I recommend most shops don't use it. Now you can, and then let me back up. The reason why I wouldn't recommend using this is because the only way to move money out of this 10,000 account is by doing a general journal entry, where we would have to go into the accounting and actually create a general journal entry. And that just really is not conducive to what I would call the normal flow of business. So typically, if you do keep cash on hand more like a rainy day fund, more emergency funds, you may want to put $200 or $300 in your petty cash so you can track that asset separately. For example, if you have like a small safe at your shop where you just keep cash on hand just in case, you might be able to put it there, but you're not going to be able to be using it in your on a daily basis. You wouldn't be dipping into this petty cash on a daily basis. You actually would do that in the undeposited funds account. Now this is where all your money's on hand. your coins, your paper dollar bills, any checks that you still have on hand that you need to deposit, or any credit cards that you've received. They're all tracked in this undeposited funds account. And what happens is the moment that you close out an RO on the service counter up here, the moment that you close that out and say, paid with Visa, it automatically gets posted in this undeposited funds account. And it's waiting. And let me show you where it's actually waiting. Under the banking, in the Make Bank Deposit feature, this is, and we select the account that we want to make our deposit into. This is where the undeposited funds are, either the checks, the credit cards I mentioned, or the cash on hand. And this can be, paper, like I said, coins, paper bills. So the way that MaxxTraxx manages monies in and out of the 11,000 account is with this feature, with this Make a Bank Deposit feature. So if you're going to keep cash on hand in your cash drawer, which I did at the shop I worked at all the time, people use cash in and out of that drawer all the time for pizza or an IOU or to buy a small part, we would actually have an amount at the end of every day where it says cash to deposit here in the parentheses. This would say $300. After I did all my deposits, I deposited my checks, my credit cards, and my cash on hand. I always left in this parentheses my petty cash. That way, it's easy for me to access. So one other area, and this is probably one of the most important accounts I want to talk about on the chart of accounts, the one other area that money flows in and out of this parentheses is the money bag, the cash drawer. I mean, because that's really what we're talking about. Undeposited funds that aren't in the bank are in your cash drawer. So in this cash drawer, I call it fondly the money bag, we can actually pay a completed repair order from here after it's in completed status, which none of these are at the moment. Or if you do a cash payout, every time you pay to, Chevron, if you're going to get gas for a vehicle, you put in the amount that you are putting in the vehicle, and you expense it. And again, this GL account, it's going to go to, let's say, fuel for a customer vehicle. It's going to go to an expense account automatically. And we're going to talk about that. But where it's coming from, it's coming from that 11,000 account undeposited funds. Does that make sense, guys? The other part of that is non-invoice cash in. And this does not happen very often, but occasionally. If I click on non-invoice cash in, let's see what kind of options I have. Capital investment from the owner, maybe a loan from the owner, income miscellaneous, which I really don't like anything that with the term miscellaneous in it in regards to our taxes. But maybe if somebody were to pay you cash, if you sold them your waste oil, which Derek, I could see up in your part of the country, that's a big deal. You sell your waste oil, they give you $55 cash. You would put it in as, you may even create your own custom income account. And again, income accounts are 40,000 accounts. So you would select it here and point it to the right account on the general ledger to post that transaction. So that's, like I said, I kind of spent a lot of time on that one account, the undeposited funds account, but I think it's really the most important to understand because you physically use this a lot. You actually kind of get your fingers into this a lot. Everything else is pretty much done automated in the background. The other thing I wanted to talk about is when you're setting up your system, what you do is you essentially count all the money that you have on hand. Anything, if you have any undeposited checks, if you have any cash on hand, and you want to get that onto your general ledger on the first time, the way that we do that, and we'll reference back to this feature a lot, is under Setups, Accounting and Payroll, you have your Enter Beginning General Ledger Balances. And here, you'll enter the date that you want to change your beginning balance. Let's just say today, for example. And then you select that account, undeposited funds. And then it lets you select it and then put in an amount. I'll just double click on here, and it says enter the new beginning balance. Now this is another key feature. I want to explain the way that this beginning balance field works. When you enter the new beginning balance, and let's say the current balance on hand right now says I have, well, wouldn't that be nice, $63,000 of undeposited funds. So what it would be saying is if I really wanted to say my beginning balance was $70,000, when I enter $70,000 into this field, let's just do it for fun, it's only going to adjust, make an adjustment on my general ledger for the difference. Because the amount that I'm entering in here is what it really should be. So it's going to take what's in there today and then adjust it to what you want it to be, and it'll calculate the difference. Let's look at that. I'll click OK and close. So now if I go back to accounting, chart of accounts, whoops, and look at that undeposited funds, now I can double click on this one here. I think I can double click, yes. And you can see to go from $63,000 to $70,000, it made an adjustment of $6,500. So that is an important element of this feature to understand. So when you're setting up your beginning balances, you know that the amount that you're putting in there is what you want the end to be, not the amount you think you need to adjust it to. Because if I thought I was going to put $6,550, because I thought, well, I want to get it from $63,000 to $70,000, I'll put in the $6,550. I would find out it actually would make an adjustment the other way and take out like $57,000. So my ending balance wouldn't be correct. Is that clear, guys? Any questions on those? Okay. Okay, so let's jump back to chart of accounts. Now we get to pick up speed and start cruising through here. So checking account, again, just an asset. You can rename this to anything you want. Let's say my checking account number 1 really is U.S. Bank, and I call it my primary account. I may want to do that. So this, I can change my description to whatever I want it to be. But essentially, you want to personalize it to whatever is a good reminder for you. You could actually essentially put the last 4 digits of the checking account to help you remember. There's also, there's also a spot in here if I click on Edit to actually put in the bank account number and your bank routing number if you want to, and maybe even describe what kind of transactions go in and out of this general ledger account. And you'll notice this kind of information is available under each and every one of these accounts on this chart of accounts. And of course, you wouldn't want to put banking and routing information under anything other than the bank accounts, but you always have this note field. So if you ever want to give somebody a hint as to what type of transactions are going in and out of this account, you can record that there. Now, what's very key about setting up, unlike the petty cash or the undeposited funds, where we could use that one great feature under setups, the banking is also tracked with a banking feature. So we can't use that setup because we want to get the beginning balances we're putting in these checking and savings account in the banking section as well. So the way that we actually set up the beginning balances, let's say, I don't think I have anything in, let's say savings account number 4. Let's look. Yeah, it looks blank. So the way that we put the beginning balances in your checking is through the bank account reconciliation. So I'll do one real quick for you. So we'll just go under Banking, Reconcile Bank Account. I'm going to choose Savings Account number 4. And I'm going to click on the Add button in the lower left, and I'm going to create an adjustment. I actually probably already have the adjustment in there, but if this is a brand new fresh system, you probably would have to set this up. But by clicking on Adjustments, it'll give me my list of adjustments to choose from. And actually, you can see I do have a beginning balance setup already created. But if I didn't, all I'd have to do is click Add and create a new one. It would be a deposit. I would call it maybe Bank Beginning Balances for short. And I would say, where do I want these adjustments to go to? Let's check here. They actually go to a system balancing account. We're going to talk about that in about 5 minutes, but let's just select it so we have another one in there, just so you can see how the whole process works. Just double click or click the select button. And you can leave the dollar amount blank because remember, we're just adding to our list here, okay? So once we add it to our list, then we actually click the select button and say, I'm going to deposit on this day $10,000 as my beginning balance on my savings account number 4. Okay, so I'm just going to say starting balance here, and then click OK. So not only do we now have this in our bank account, so let's look under, let's look under banking, view check registers. I'm actually looking at savings. You can now see I have $10,000 as my ending balance, okay? But more importantly, for this webinar anyway, let's look under accounting chart of accounts. And if we double-click on savings account number 4, here also is that ending balance. So not only are we tracking it in the banking portion of MaxxTraxx, but we're tracking it all on the general ledger. So at this point, once you do that initial setup, you won't be fooling around with the general ledger at all. In fact, really, other than doing your depreciation numbers at the end of the year, there is a precious few things that you should ever be adjusting on your chart of accounts using a general journal entry. And if you are, think about, am I bypassing anything else in the system? So that's just something you want to kind of keep in mind there, because this is really just for initial setup purposes. Any questions there? Okay, so you can see these are all 8 of these are exactly the same. They're just checking or savings accounts, and you could add more as you want. In fact, let's do that. Let's say we had, wouldn't that be great? Let's say we had 5 different savings accounts. What would we do? We would click on Add GL Account, and this is a fresh GL account form field. So let me move this over here. I would kind of recommend you stay in a similar order or similar pattern of your numbering. So let's call it 11150. And this is going to be savings number 5 as my description. And the type, if you're not sure about the type, and I'll be honest, to this day I still kind of look. I look and see, well, what was it before? What's a similar account look like? And this one actually has a type of account type of bank. So we would just click on type and find bank in the list and select it. And that way we now have our another general ledger accounts. Now this isn't done as frequently in the upper portion of the chart of accounts, but as you'll see, and as I mentioned, in the 60,000 accounts, the expense accounts, you may find yourself adding these all the time. And we'll get to those a little bit later, but I wanted to show you how you do that. You click that Add GL Account button, okay? So let's go back in to chart of accounts. So the next asset that we have on hand is credit cards held. Now this account isn't used as frequently as it may have been in past years because my credit card company, for example, if I hit a batch, hit my batch report at 6 o'clock at night, usually my bank deposit of all those credit cards I took in for the day are actually posted in my checking account the next day. But if you know that you're going to be holding some credit cards for a while, again, not a clean way to go in and out of this account. It's more just for going through a general ledger account. But you would be taking the money out of undeposited funds, putting it in credit cards held, and then actually moving it back once you receive that deposit to deposit it into the appropriate bank account. So again, not used that much. Rex, do you have any comments on this credit cards held account, how we want to use it?
Well, it's really only in this chart of accounts because it was a carryover from MaxxTraxx.
Right, kind of like the petty cash, right?
We had an automatic function in there that would write to it, but I agree with you. This is a lot less useful these days than it was at one time when there was a lot longer lag in period. It was really put in there for people who were really cutting it close on their balances and needed to know exactly how much was in their checking account and not how much was going to be there tomorrow. So they would hold it out for that day or day and a half before they would actually put it in as a deposit. So whoever was writing the checks didn't overwrite the checks and overdraft.
I see. Okay.
So yeah, I just wouldn't even mess with it.
Yeah, I wouldn't either. I don't think we just have a requirement for that much anymore. Okay, so our next one on the list is receivables sales. So now, again, an asset, because this is valuable. This is something you eventually are going to have in your hand. It's going to be valuable. So really, every time you make a charge onto a customer account, RO, you're not receiving money and putting it in your checking account where you like to. You're actually saying, okay, I'm still an asset, but I don't physically have the cash yet. So then when you do receive payment, you actually go into the customer account, and from the customer, let's do one. If we go into a customer account by clicking on customer search, and we go in here, and we receive a payment. Under customer options, we have a payment, pay an AR invoice, so we're paying this person's bill, my bill, and I receive this $28. I click next, and I paid it with cash or a check. Let's do a check. Apply the payment. Okay, so what exactly happens when we make this transaction? When I click Finish, let's jump back into the chart of accounts. What's happened right here is that money that I had coming to me in receivable sales now has been taken out of here and has been put in undeposited funds, and it's waiting for me to put it into one of these bank accounts. So let's actually look and see if we can, if we double click, here it is, AR payment, $28. So this balance was reduced from $17,461 by 28 bucks to $17,432. So it took it out of receivables and it put it in this undeposited funds. So I've just increased my undeposited funds to go to the bank by that 28 bucks. So that happens automatically all day long when you receive payments. So that's really, again, another chart of accounts that you wouldn't want to be manually posting a receivable to, because if you did manually post something through a general journal entry, which I have to say I've seen a few times, you're bypassing that customer record. So that customer record will look like they still owe that 28 bucks. So that's why it's so important. Now, when you are starting your system, you actually would not be putting numbers directly in here. In fact, let me show you something. Go under Setups, Accounting and Payroll, our beginning general ledger balances, and we'll again make it today's date just to get in our list. You'll notice we don't even have the 12,000 receivables account here. We don't even have it to choose from to be able to put in a beginning balance. Why? Because we're kind of forcing you in MaxxTraxx to do it through a customer record. Similar to the bank account setup, instead of just putting in the starting balance through the setups here, we actually have you do it through banking because it's actually tracked in the banking part of the system. Well, same thing with accounts receivable. We actually track them through the customer record. We actually track them through this part of the system as well. That's why we don't even have a choice there. So if you are starting your system or you're starting to track your receivables in your system, you would actually go into a customer search. Let's grab a customer that may not have anything in here. And we actually would, by going into customer options, create a new invoice. And this, again, very similar to your banking, would be a beginning balance. So let's say we're starting to put in all of our receivables, and Robin owes us $2,000. We would call it a beginning balance. Let's call it beginning balance entry, for example. And you could see it's automatically going to receivables. Okay, it's automatically going to flow into that account for us. Now, where do we put the other side of the entry? Remember what I said about under setups. Every time you use that setups feature for beginning balances, everything is put in the system balancing account. And again, we'll talk about that in a minute, probably in about 2 minutes. But that's where we would click Add and just put in the balancing account. And you'll see we're going to use this a few more times, and then I'll explain it. Okay, in fact, let's just put that in there for now. And close. Okay, so what we've just done on our chart of accounts is we've just increased our receivables $2,000. Okay? And the other side of that transaction was tracked in our system balancing account, the 19,900. And again, we'll talk about that once we get down there, which we're getting close. So any questions on receivables, how receivables are tracked and entered into the system? By the way, credits work the same way. If you were to start a customer record and you realize that you have a credit available at your shop for those guys, same thing. It actually would reduce your receivables by the amount that you put that credit in, but it'll go in automatically. Now, receivable notes. This is where you hold the amount that you may have loaned out to somebody. Let's say your company, your shop, is owed. You're going to receive this money back. Okay, so again, it's an asset. It's money that's eventually going to be coming to you. So that could be a loan to another company. That could be a loan to an individual, which segues right into our next account, receivables employee advances. So what you can do is you could write your employee a check, or they could take it out of the cash drawer, which our employees did a fair amount, left a little yellow sticky in there with their name on it. And what you would be doing is saying, I'm going to take money out of my undeposited funds or my checking account, give it to you, but I'm going to keep track of it here. You owe me this money back. So a couple of ways that you can, when you receive that money back from your employee, how do you enter that payment? You can either deduct that from their paycheck as a loan repayment, and that is automatically set up in the system to flow right back to this account and start knocking it down. So what happens when you receive a payment, you reduce it from here, but you increase it in your undeposited funds waiting to go back into your bank account. Now, the other way you could do that is if you don't deduct through their paycheck, is you can go through your cash drawer. Because, again, this is where we manage our cash drawer transactions. We can call it non-invoice cash in. And when we did this, and, you know, employee, we'll just say employee paid back loan, and the loan was $100. And they paid, yeah, they paid us cash. But we need to disperse it to this general ledger account. So how do we do that? So I wanted to show you an opportunity where we'd have to change something in what's called our default account postings. Well, let's go ahead and do that real quick. So to get something to show up on this list as either a payout or a non-invoice cash in, we actually go into setups, we go into accounting and payroll, and go to the default account posting. Now again, on this section right here, 95% of shops never have to change anything in this upper part. Well, actually, I should say, actually most of these, most shops don't have to change any of these. There's a lot of automated postings here. Look at all these accounts, and this is all automatically set up, okay? Not much you have to do, but under cash and system accounts, was it that? No, it's, forgive me, cash payout disbursements and miscellaneous cash income. These are the two that affect that little green money bag. So this, again, is miscellaneous cash income. So I need to add a transaction type by clicking this button. And my transaction description is going to be employee loan repayment. And this will look familiar, by the way, because you also have that option in payroll. So what we're going to do is if we receive this cash back in, where are we going to put it? We're going to put it right back in that one account. Let's see. Whoa, where's my number? Receivables. It's 12300. Okay, Rex, why aren't we on here? You know, probably because we have to go through payroll. That may be why I don't have it in here, and I'll tell you why, because my system is actually set up. Let me show you this right here. Payroll deductions, user definable, this one right here. I actually do have it set up in my system for loan repayment, employee advance. Okay, so that's why it's not showing up there, because it's right here. So let me show you what that looks like. In payroll, when you go to pay your employees and run payroll, guys, let's grab someone here as an example. Anyone. We have this right here. When you write their paycheck, loan repayment, you enter in, there's that $100. That's where he's going to pay us back. And that is going to go right back to that $12,300 account, employee advances. Any questions on that? Okay, so let's keep going as we're cruising through. I know we got a big day here. We're going to try to get through these quickly. So, you know, this used to be actually called receivables other. When you start a fresh system, I actually changed this last week for a used car company that we're bringing online. Actually, they're getting installed today. Very exciting. customers charge, kind of like customers are receivable sales, receivable notes or loans. This is receivables from your employees. Well, this is receivables other, and we call this because this used car company is getting receivables internally. And it is actually, like I said, user definable. It's not used that often unless you want to break out, well, you think receivables I may be getting, oh shoot, I may be getting every 30 days and staying up on my receivables. But your receivables others, these may get stretched out longer. So if you know somebody's going to be paying every 3 months or every 6 months and you want to stretch those receivables out because you don't want to depend on those receivables, you may put it in its own dedicated account. And let me just go ahead and change this back to what the default was. And the default is other. Any questions on that one, guys? We good on there? Okay, now the exciting one for me. Inventory parts. Now this little chart of account has so many transactions in it, it's incredible. So if we were to double click on it and look at this transactions, every single time you put in a restocking invoice from a vendor, or every time you post an RO, it's going to take every single part you put in the system and every single part you take out of the system gets tracked through this account. So this is where you, like I said, you post a restock ticket, or from the part record itself, you can enter in here. Let's look real quick. Let's grab any part. Under stock, you can enter a stock on hand. And you guys might recognize this from the Add a Part wizard. If you're putting in your starting inventory, this is where you put your stock on hand. Or if you, like I said, if you go back there and it says you have 2 on hand and you really don't, you only have 1, if you adjust your stock quantity, because essentially you're missing 1, let's say I'm going to subtract 1 out of my inventory, it's tracked on the general ledger account 13,000, and it's actually taken out. Let's look at that real quick. So if we go back into accounting, chart of accounts, and look at 13,000, you can see I actually reduced my inventory valuation. Instead of having 14,361 of parts on hand, I've now gone to 14,356, $5 less, because my inventory, parts inventory valuation has gone down because I no longer have that part. Now it's the same thing if you buy parts. If we do a restock parts ticket, let's say we have an order parts, we convert it, and let's see, we got $6 worth of parts, and we post this. And, you know, you guys are doing this all day long, entering these restock parts tickets. My math was off here. Put in my fake inventory number, and this, look at, we can see this restock parts ticket, $6 worth of inventory, because we're buying these 2 oil filters. Now, if we go back into that 13,000 account on our chart of accounts, and by the way, I can just type the 13 in a progressive search down there. There is at $6. So I just increased my valuation by $6. So you can see every single time you guys restock a parts ticket, it increases. Every time you sell a part, it decreases. So that's how that works. Now the starting number, typically the way that I put in my beginning balance for inventory parts is I actually, through the parts department, I enter in the Add a Part wizard, and I enter in every single part, put in my description, my cost, the amount that I actually have on hand. You guys might recognize this. Let's get to that screen really quick. Parts is this is actually the stocking information, not your real quantity. But let's say this is a $2 part, and it lists for 5. If I click on Advanced, this is where I put my current stock on hand. So if I bought 10 of these test parts, and I click Next, and they were $2 a piece, right? So now if I go back into accounting, chart of accounts, and look at that 13,000, I'm just typing 13 for the progressive search. There we go, 10 times $2. I've just increased my inventory. So a couple ways you can do it. You can enter in all your parts that way, and that's how you would build up your parts inventory number. And that is automatically posted to the 13,000 account. The other thing that people do is sometimes if they get converted data over in their system, you can run a report, because any converted data doesn't post over to the general ledger, but you can run a valuation report under reports, under inventory, under general inventory, inventory valuation. And based on this number that comes up, it's a huge report, so I'm not going to run it. Based on this number that comes up, then you would say, okay, that's what the system says I have in total inventory valuation. Then I would go into my setups, accounting, payroll, and use this feature, beginning general ledger balances. We'll just put in today, and this is where we would select the 13,000 account. So that's how we put those in. Any questions on that? Okay, so now we've talked about inventory parts. Now let's talk about inventory cores. And that's 13,200. Now I have these are two custom ones that I put in. I had a shop that I was working with again the other day that wanted to break their parts inventory into body parts, collision parts. Don't know if I like that term. And we also broke them down into tires because they wanted to track their inventory differently. And really, guys, how do we get information to flow into these individual general ledger account numbers instead of just going to inventory parts? Through the product code. And actually, cores are automated in the background, but we have a choice here to select product code. Let's look at that real quick before we jump into cores. So when we talk about where it goes on the general ledger, we are talking about in the parts record. Let's grab that camshaft seal again. Under, here it is, product code, GI. If I click on select, I have all these options. I can change this product code, so it's going to, general inventory flows to the standard 13,000 account. But if I were to say that this seal, what was this? Camshaft seal was a tire, I could change it to flow to this product code, which has a different general ledger account number. So I can track my inventory in two different or three or four or five different buckets on my general ledger. Now, conversely, you can also have a different product code for batteries, for example, but notice this. Batteries are tracked in the same general ledger bucket as general inventory. But by having a different product code, kind of getting off the track of the chart of accounts right now, by having a different product code, I can run different inventory reports to slice and dice my inventory by product code. But that's how we can tell the system where to put that inventory. And by the way, it's also set up that once I sell that part, it tracks the income from the sale at the 40,000 account and the cost of that sale, the cost of goods sold, in a 50,000 account automatically. And again, I would probably say, venture to guess, easily 80%, if not 90% of shops really just use one product code. Everything goes to general inventory and is only tracked under the 13,000 account, and sales are only tracked under 40,000, which is sales parts, and expenses are only tracked under 50,000, cost of goods sold parts. So a little bit of a digression there, but I wanted to again show you how we get stuff to flow to these different general account numbers on your chart of accounts. So let's go back to cores, because this is kind of important. Now the way that these work, when you purchase a part from a vendor that has a core charge assigned to it, that core charge is actually posted in this account. It doesn't actually show up in inventory anywhere, you know, the core charge. Now what happens is when you sell that part, you either charge the customer for the core charge. Let's say they want to keep their starter and they want to take it home, even though you're reinstalling a remanufactured starter. They want to keep the core for some reason. You would charge that customer for that core charge. So it would take it out of this core's inventory account, and it would move it into a sales account, 40,200, which is a sales account for every time you sell a new core. Now, most of the time, people are like, oh, just keep the core. And if the core is good and you don't have to charge because maybe, sometimes you can't return that core back to the vendor for credit. You have to charge customer for it because it's junk. Then you actually, once you get that core credit, then the system knows when upon closing that repair order, it moves from inventory cores to inventory used cores. Now what happens is once you return that used core back to the vendor and you get a credit memo, you actually post that credit memo. And this is done automatically through the restock parts function here, the restock parts feature. It automatically will credit that used core account. In fact, let's look to see just for fun if I got any in it. I actually don't have any in there. But that's how that works. Any questions on that, tracking cores in the system? Again, the interesting thing about cores in the system, which is different from parts, is that you don't actually see these core charges because it's really nothing physical. It's just a financial thing that's charged by your vendor, just to make sure you get those used cores back to them so they can use them for remanning more parts. Now, sublets, another, not really a tangible, but something a little bit different from our old DOS version to our Windows version. We actually track sublet purchases like machining rotors or, cylinder heads, something like that, as if it were a part. And the reason why we do that is to ensure that the money that you paid for that sublet labor is getting billed out to the customer. So this is a very interesting chart of account to look at, for me anyway. You'll see here that they're often very correlating where we're adding it in and we're taking it out, adding it in and taking it out. So let's see if we've got some that match. Here's a $30 and a $30, a $300 and a $300. So you'll see that what we've done is that a lot of the times, let's see if we can get some up here that are a little more tied together. Here's an example, 20, 10, 24, and 20. So all of these were grouped together because they were purchased on 4 different vendor invoices, 4 different types of sublet, but billed out on one RO for all 4 of those. So the 20 plus 10 plus 24 plus 20 is 74. So you'll see that the system tracks when you pay a vendor for machining heads or turning rotors or, gosh, anything that you would do on a tow bill, for example. This is where you're putting it in inventory and tracking it as if it were a part. There's no part number, but the money end of it is tracked. And then you actually sell it. Okay, you actually sell it and get it out. And you want to try to keep this as close to 0. It's actually negative right now because I obviously have to enter in a repair or enter in a restock invoice for $57 bucks. But the whole idea is to keep your ending balance at 0. That way you know everything you're buying is getting sold. So that's a little bit different in our program, but it's a handy tool. And again, the restock parts ticket and the ROs themselves manage this account. You don't actually have to do anything back here. Again, this is a couple more inventory, like used car company is tracking their used cars as an actual part. We created a general ledger account, and now we track it under there. Same for a gas station. This is actually, fuel is actually kind of like a part. It's something that's a fluid that you put in a vehicle. So we could track it in the system as if it were inventory. So a couple different examples there. Now, inventory miscellaneous supply. Actually, we don't typically track miscellaneous supplies as inventory. When you purchase miscellaneous supplies, let's say from Napa, you buy some wire ties, maybe an extra package of rags, or anti-squeal, or whatever, the supply stuff that you don't typically itemize out on the repair order, but you charge a supply charge for. So how do you typically enter those in the system? Well, you actually go into a restock parts ticket in 2 ways. Let's just do CarQuest for fun. You either can enter them under here, miscellaneous charges, which are supply charges, and this dollar amount that you enter in here goes to your cost of goods. It kind of bypasses the whole inventory portion at all. It just becomes a $50,000 cost of goods. Or if you click under Add Line Item and you click on Shop Supply, anything that you enter in here, let's say shop rags, for example, anything that you enter here automatically in the background bypasses that inventory miscellaneous supply and just becomes a cost of goods sold. So why would you ever want to use that? Let's look at that again. The only time that I've actually seen a shop ever really even consider using this is if they want to actually sell miscellaneous supplies under a part number, but they want to track it in their inventory differently. So this really is not a whole lot different than tracking your tires separately or your collision parts separately. You're just saying that these parts that we call inventory are actually miscellaneous supplies. So it's a little bit about how that works. And then we get a buzz through the rest of these. These are simple, simple, simple. Pretty straightforward. 14,000 are CDs, certificates of deposits. This is really just like a bank account, and it's where you track your money asset. And once you cash it out, for example, you would probably do a general journal entry one time to move it from a certificate deposit and put it into your undeposited funds. Now, remember, we probably would not want to go directly from a certificate deposit. In fact, it probably won't let us deposit it right into a bank account. Why? Because we'd be bypassing our whole banking feature, right? So that's why you would do a general journal entry into undeposited funds, and then from undeposited funds, use the make bank deposit feature to put it into the appropriate bank account. So that's pretty much how a CD works. And they all kind of are about the same. Long-term investments. Again, similar to a CD, you would manage this investment asset in this account. Now let's talk a little bit about, vehicles, shop equipment, office equipment like computers. These are assets as well. These are really, really important because what we're saying here is this, let's say I buy a vehicle. I buy a shop truck, $10,000. I'm going to I'm going to write a check and take it out of the bank account, and I'm going to put the other side of the transaction off to, let's see, I could do original value or a loan. That's a better example. Let's say we bought a vehicle on a loan. What we do is we enter in the original vehicle amount, $10,000, and then we would have a corresponding payable, a liability, right? A payable, maybe a note for that vehicle. So the asset is $10,000, and from day one, our note is $10,000. Now, we may have finance charges on top of that, but that's an expense. But that's how you get in the system. Rex, are you with us? I want Rex to come back and talk a little bit.
I had muted myself while I was talking to somebody else.
Oh, not at all. Let's, talking a little bit about vehicles' original value and offsetting the other portion of it to, for example, a loan. Yeah. When you purchase a vehicle, you could also write a check, and then can you write a check and then put it off to original value?
If you, for instance, if you paid a down payment on it, you could disperse the check for the amount of the check, the total amount of the value of the vehicle, and the difference would be going to your liability, the portion that you're going to be borrowing from.
Borrowing from, okay.
That, it would be a multi-part disbursement on that check. Now, when you go to make payments on that, you're going to write a check and disperse the principal portion of the check to the liability account that you've created.
The one that we talked to down here.
Right,
note.
And the interest will be dispersed off to an interest expense account. So let's say you made a $1,000 payment, and $200 of it was principal and $800 was for your interest.
There we go.
Exactly that. Yeah.
Okay. Okay. So tell me a little bit about. This is, like I said, this is the only part that I don't do. I have my accountant do every year. Tell me a little bit about how we enter in depreciation. And this is always entered as a credit onto this debit account. So it's actually entered in as essentially a negative, right?
Right. It's what they call a contra account and a contra asset. And it always shows up as a negative value in your balance sheet. But when your accountant tells you how much you're going to be depreciating each of your vehicles, you'll make the journal entry as a credit to the depreciation account, and the debit portion of it, the offset, would be to the expense, which would increase your expenses because basically you've lost value, which is an expense to you. So you've reduced the value of your asset between the original value and the depreciation value. When you add those two together, is what your current value on the vehicle should be.
I see.
The expense portion is what you've written off to your expenses.
Right. And this is done through a general journal entry, correct?
Through a journal entry, exactly.
Okay. Okay.
All
so we have actually, go ahead.
All those are able to be written to.
Right. Okay. Yeah, some of these accounts we can't write to, obviously, like the bank accounts. So we have this. We have a couple in here for Vehicle 1, Vehicle 2. If you have 10 vehicles, again, this is where you would add a GL account and follow kind of the same numbering, chart of account numbering convention. It would be like 15040 would be the original value, and 15050 would be the depreciation. So you can build a lot in here. Same goes for this machinery. Excuse me. Same goes for the machinery and equipment. They have value, just like that vehicle has value. So you would enter in the original value. Again, if you had a loan, you would offset a portion here, the other part of it's the loan, or if you're going to pay cash for it, it comes out of the checking account that you're using to pay for this equipment. And again, some people group all of their machinery and equipment into this one account. Other people like to break it down. And I've seen several entries where it'll say, instead of machinery equipment, it'll actually say lifts, original value. It may say alignment machine, original value. It may say, analyzer or scope, original value, and then each has a corresponding depreciation account with it. So you have the opportunity to slice and dice this as much as you want. Now, really, what is the whole idea behind tracking your assets in MaxxTraxx? Why would you go through entering all that information in here? A couple different reasons. Well, first of all, you want to be able to depreciate it, so you want to take that as an expense, right? So that's half of it. The other half of it is when you value your business. Everything that we've been talking about on this upper portion, which for me is really the most, for me, this is the hardest part for me to learn, all the intricacies of the 10,000 accounts. Everything else after this is pretty much piece of cake, which you guys will see, and that's also why I'm spending so much time up here. But the whole reason why you enter all this in is because this stuff shows up on a balance sheet. And if you go to sell your business, or if you want to really see how your business is doing, it's important to not only include, how much money is in your checking account, which how many people manage their business by checking account? Well, I know a lot. Probably the majority of shops managed by checkbook. But the idea is if you understand how much you actually have in value of assets, or conversely for some shops, how much you have in liabilities, how much you owe, that's where it's important to make sure all this information is getting entered into your system. And like I said, majority of shops managed by checkbook. So I would venture to say less than 50% of the shops, if not way less, actually go through the time of setting up all this balance sheet. And you can see why. This is kind of convoluted. It's kind of confusing. It's kind of scary. And if you don't know how it works, you don't even know where to get started. So that's why I wanted to spend this time today, and I appreciate your guys' patience stepping through each one of these. Now, same thing for office equipment, furniture. It's all going to be pretty much similar, all the way through to 17,000. We have building, and all these are going to be assets that have to do with tangible property that you guys have. So when we jump down to the 18,000 accounts, the first one we have here is insurance prepaid. So the way that prepaids work, this is used to post a payment to, for example, an insurance company when you may be paying for the entire year up front. Now, this is also an asset, considered an asset at this point in time, because technically the actual insurance expense has not been accrued. Therefore, you're not really entering it in as an expense yet. So a lot of shops will, on a monthly basis, do a general journal entry, and they will take 1/12 of whatever this prepaid is, and they'll do a general journal entry. They'll take a 1/12 of it out of here, and they'll put it down at the expense account for the insurance. And the reason why they do that is it keeps a little bit more accurate profit and loss statement. So let's say I paid my insurance premium once a year, and I paid it in January. If I just put under my expenses, $1,500 insurance premium, it would make my month of January look really bad. It would make my expenses look really bad. So anything that you have prepaid like that, you put in this asset account and dole it out, 1 month at a time onto your expenses. That way your profit and loss, your P&L statement stays a little bit more accurate to reality. And it's really the same for rent, any taxes, any prepaid advertising. This is another big one too. So that way you get to spread out your advertising over the year, even though you may pay your premium once a year. So how are we doing? Any questions on that? Walter, do you have any suggestions here at this point?
Well, I was just wondering whether, anybody that's on the call has gone through this, and if you're doing it any differently, or if this is basically how you're doing it.
Yeah, I think we've talked a little bit. Derek, I don't think you've gone this far as far as setting up your general ledger at this point, have you?
No, I have not.
Okay, so we've got a little ways to go. I don't know if Saray's kind of connected in with us right now. How about you guys, Jennifer and Tony? Have you guys done this part of your balance sheet yet, your chart of accounts?
Oh, yeah, we're totally set up.
Okay. How have you done any of this differently? Is any of this kind of a different approach than you've been taking? Something you want to share?
We just, in our asset area, we split out, we sell tires and we have service. So we really split that out because we want to look to see our gross profit on service compared to tire sales and all of that. So we do break out our balance sheet a lot differently in that area, and also in expenses or for cost of goods and income. So we can see that flow,
So are you utilizing product codes in order to accomplish that?
Yes, we are.
Okay. Go ahead, Walter.
That was basically what I was going to ask. Are you also breaking your labor out, your tire labors out on their own line?
Yes, I am. So I have a totally broke out tires, for cost of goods and income and assets versus repair. I have it set up differently.
Very good. Well, that's kind of actually how we had this example. I was working with the shop, like I said, it's getting installed today. How we broke it out for them, they broke it out into collision parts. And this has, well, you'll notice here's a great example, and Tony, thanks for bringing that up, how you've broken it out. That product code, every time they buy a body part, is inventoried under 13,020. It's sold under 40, let's see, it's sold under 40,000 to, let's see, that's labor, no. 40,030 is the sale of the body parts. And I keep saying body parts, I should say collision parts. And then it's expensed under its own cost of goods, 50,030. So you're doing a similar, kind of a similar structure, Tony?
Yes. I've got, I've got cost of goods for parts and cost of goods for tires. I've got, and then the tire side and the repair side. Well, repairs, I've got tires on the asset sheet, and then I've got on the income side, I have tires, anything related to tire sales, wheels, all of that flow to the tire part.
Okay, good idea, good idea. So you're changing product codes on anything that has anything to do with tires, parts, labor, accessories, everything?
Okay, exactly.
Right. Yeah.
I have quite a few product codes.
So using that information, have you adjusted your pricing, or
Well,
is it something you're just monitoring?
I use it to put together a weekly report that I watch closely what's happening as far as our gross profits in those areas, and also how the way it comes out, then you can also see the discount part of it, you know, that because we offer a lot of different discounts and how it affects, you know, both part sales and repair and tires and all of that. So yes, it's very useful information.
Good, good.
So yeah, great, Walter. I appreciate, thanks for sharing that, Tony. Like there's so much flexibility in the product. There's so much customized, it's just you can customize as much as you want. It's really, we often ask people, though, how are you using that information? If you want, for example, a custom report, which if it ever gets out, coming out in our next update, we're going to have this great feature to be able to track by profit centers and select general ledger accounts to be able to see by profit center what is my sales and cost of goods. So I can get gross profit by those product codes, so you don't have to manually do that. So that's going to be handy. But we often ask people, how do you use that, and how do you use that to make management decisions? Do you change your pricing? Do you focus more of your money towards investing in inventory tires versus maybe I'm not going to afford that many tires, but if it's profitable, you will? Is that the type of management decision making you're making with that information?
I'm able to see that, but I'm also able to, because I put it into my own report, that'll let me see what's happening as far as I have quite a spreadsheet that I use that shows how the guys are doing, also as far as on the different types of jobs. And if we're pricing, a lot of the work in the tire area is kind of a loser area. But I'm able to monitor that more carefully by having it separated.
Right.
So.
Another way I've heard actually people use that information, Tony, is if they're looking, if they know that they're shorthanded, it's like they're just always seem to be getting behind. I've heard people say it's a good way to make personnel decisions. Do I need to hire a lube tech or a tire guy or a C tech or an A tech? That's where I've actually had people break down their labor, and we'll get down to that a little bit more, when they track their sales of labor into tire labor, diagnostic labor. And that way they get a better, kind of a more clear understanding of where they're making their money. Are they doing a lot more diagnostic work this year than they did last year? Or is that way down? Maybe they even track their labor by, maintenance labor services are all tracked in one general ledger area. So if that's really up and that's actually real profitable, then you may say, well, maybe I'll build another bay just dedicated to lubes, and maybe it's not as bad as a loss leader. I mean, it's pretty complicated, all the different kinds of management decisions you need to make and all the things you need to consider. So the more that we can give you information out of the program to help you make that decision, is it kind of more like a marketing expense that you're doing a lot of oil changes? Is it that you notice the oil change work, the maintenance work goes up along with getting additional repairs? So it's just a way to, the whole reason why we have this is so that you have more information at your fingertips to make management decisions and direct your business.
Right, and you guys have come a long way. It's been awesome.
I sure appreciate that. Well, I'm very excited to show you the new report. So as soon as that's available, I'll dial up. We'll do a one-on-one call, and I'd love to show you how it works and get your feedback. So we will do that. I'll put it on my calendar. So cruising through, almost done with assets here, guys. Deposits are a little bit different than prepaids. Deposits you anticipate on getting back. So this is more an asset for rent, a deposit for your lease, or a utility deposit. Usually after you've been with a utility company for 6 months or a year, they'll usually give you your deposit back, or any other kind of security deposit. This could be, again, as we were talking, you can add in customizable. We could say 19700 is a different kind of deposit. 19750 is another kind of deposit. Or you can just say I have all sorts of different security deposits that I group together here for my computer or for an equipment lease deposit or whatever it is. And so prepaid, you peel a little bit of this out every single month. Deposits, usually you get back, and this goes to an expense. Deposits usually get refunded and go back into your checking account. So now we get to kind of the most unique I should say account on this chart of accounts. And this is a system balance initial setup account. Everything that you do in your initial setup, when we talked about that one feature, let's close it here under accounting payroll and your beginning general ledger balances. Every single time you put in an entry here, the offsetting side, you select the one that you're going to make an adjustment to. The offsetting side is going to that 19,900 account. So the whole goal here is once you enter every item on your balance sheet, once it's completely set up, this 19,900 account will eventually zero out when everything has been accounted for. Now, a lot of the times people say, well, I kind of get to, and this may vary, and please always talk to your accountant about this. You don't want to take our word for it because we never want to really offer any kind of accounting advice here, is the offsetting amount to clear out that 19,900 account oftentimes is to capital, because people are listing in, especially these 10,000 accounts, their assets, what they brought to the table when they opened their doors. So when you're putting all these things in and you end up with this big chunk of cash, this big number here, and the 19,900 account, you're like, where does that go to? Well, it's capital. It's what you brought to the table. So again, you need to work with your accountant for that, but oftentimes that's exactly where that gets cleared out. So anything you want to add to that, Rex, to that system balance initial setup account description? Rex, are you on with us, Rex? You know, we'll come back to that.
You're right. I'm sorry. Once again, I was talking away and with my mute button going.
Oh, no, shoot. About the initial setup account, balance account?
And what I said earlier was really brilliant, and I can't remember what it was. But
oh, no.
All I was going to was to just reiterate what you said, is that the 19,900 account, when you're all done, when your system is in balance, there shouldn't be anything in there. If you've got money in there, it's because it's money that belongs in some other account, and you need to figure out where that goes. The system should never be out of balance, but if it is, it's conceivable that it might flop into there. But anytime you run a balance sheet and you see any money in there, you need to stop and figure out why that's in there and where does it really belong, because it's a non-account. It doesn't really exist.
Well, it truly is a setup-only account.
Yeah.
Really. What I tell people, though, Rex, and give me your thoughts on this, is I often tell people if you are setting up your balance sheet for the first time, usually you don't have to, because we can backdate entries onto our general ledger, which is fantastic in Windows and in the MaxxTraxx program, that you may take 2 or 3 months to clean up everything with all, because you may not have all of your assets in there. You may not have all of your payables in there. And once you finally do get everything in there and feel like everything's clear, you draw a line in the sand, then you clear that system balancing account out with an adjustment. And that pretty much you have to figure out, was it because I put in a ton of assets there that were capital? I don't know. Again, this is where we always point you guys to your accountants just to get your initial balance sheet set up. And if anything does change in here, you can always run a transaction report on this account or just click on it and see what's in there. See, mine's all out of whack because I did a bunch of setup. But you can, I'm trying to think, Rex, can we look at this and see exactly what's transpired through each one of these?
Oh, yeah.
Actually, I'm in the wrong section. I just need to go here.
Double-clicking on any of them will give you the whole.
There we go.
Of it.
So we know the whole kind of how this all got in here. Oh, see, here we did one here. We did that one today. So any of these beginning balances. So is it eventually, though, we can tease this backwards to see what all the adjustments were made to this account.
Also, before you close that, it's important to note that whenever you open up an account like this, it's only going to show you, as it says, the top transactions for the last year. So these numbers may not add up to the number at the bottom if there were transactions more than a year ago. And to see those, you have to click down on Find. And give it a date range that you want to look at. But typically, it's only going to show you things with that have happened in the last year. And if you're looking at AR accounts or AP accounts, it's only going to show you things that open balances. So
Oh, right.
Only at the find button to see it all.
Right. I appreciate that. Yeah, actually, I got a fresh copy loaded in, obviously, in February, so I don't have anything older than a year. But, yeah, just clicking on Find, and I usually just go back a couple years. Sometimes I find stuff entered in here, and somebody put the wrong year in, and that's where we found some kind of issues where people are like, where did that come from? So a bunch of different ways here. But, again, once you get this cleared out, you actually should keep this. Okay, let's pick one. Once you have this cleared in, you should actually not have to do anything in here because nothing really transacts through this other than through beginning balances, really, right, Rex?
Automatically, yeah, that's true.
Okay. Is our utility for unbalanced transactions, are they tracked here?
The unbalanced transactions are not. No.
Okay.
Nothing writes to here from there. That's just.
It's just out in space waiting.
Balance. Yeah, you may.
Gotcha.
You want to check there to see if there's anything in there to start with.
Okay, will do. Good. Okay, so any questions? This is always kind of a mystery to people, I think, how exactly this whole thing works, but it is amazing that at the very end it all does usually balance out to the penny. Any questions on this one before we move on to our liabilities? Okay, guys, so now we get a buzz through the rest of this because the rest of this is pretty straightforward. Like I said, the focus is really in the asset accounts and how exactly you find the numbers to put in there. So payable trades are pretty much whenever you make a purchase for a part and you use that restock parts feature up here, it is going to automatically post that amount that you now owe somebody in payable trade. It's going to show up under the vendor account as a payable, and the amount is posted in payable trade. And then, of course, when you go into that vendor account and pay your bills, immediately or at the end of the month, it actually takes the money out of here, so it's not as much of a liability. So once you pay all your bills, this gets zeroed out. Now, payable other, it's a secondary account where you can track purchases separately. If you want, for some reason, to track money that you owe somebody, payables, separately, you can kind of look at it in its own grouping. Now, notes, this is where you would put, for example, if we bought a vehicle, we may put the note here. And I've actually had people here also do $20,210, $20,220 for each individual note that they have, each individual loan that they have out. So you can break that out as much as you want. Also, if you, let's say you get a cash loan to be able to run your business. Somebody's going to give you $10,000 to get you caught up on your bills. How would you get that into the system? Well, you could do a general journal entry into undeposited funds and here, or you could do non-invoice cash in. And we talked a little bit about how to set up the default account postings to tell it to go to this payable notes. Any questions on that one? A little bit how we get money out of this account as we fill it up for notes is, again, if you make that car payment we showed you earlier, you would make a $1,000 car payment, right, Rex? We'd say $800 would come out of the note and $200 would be expensed off to that financial interest charges and down under expenses. So that's how you actually peel, this is how you actually pay this down over time. Now, payable credit cards, this really is similar to the payable trade like we track for our parts vendors, but this is anything you purchase with your company credit card, it gets tracked in its own special account. And you actually select this very own special account in the vendor record. So, for example, if your credit card is Citibank Visa, you go into the Citibank Visa vendor account and you select to track those charges in this account. And what's also interesting, a little side note, is if this is designated as a credit card liability account, it will show up as a method of payment of which to pay your other vendors. Let me just show you that real quick because I think it is a fantastic feature. If I want to pay WorldPac, I'm sure I've got something in here for these guys. Options, pay. When I go to pay these and I click next, I have an option to pay them with Citibank Visa. And why? The only reason why this is showing up here on our list, and we have a procedure, by the way, to show you how to do this if you ever want to do this, in order to track this, and of course it just really moves it from the WorldPac vendor account over to your Citibank Visa vendor account. So in reality, what is it doing? It's actually, let's go back to our chart of accounts, just type 2. It's going from payable trades to payable credit cards is what it's doing. And then when you write your check to pay your credit card bill at the end of the month, it clears this out, or hopefully clears it out if you're not carrying a balance on there. Now payables, other short term, this is just, again, another account that you can use to track the money that you may owe somebody else, another loan, that kind of thing. Rex, you want to talk to this one at all? Payroll liabilities, QuickBooks? And I think you're on mute because I don't hear you.
No, I'm just looking at that, and I don't know where that came from. Is that?
I don't either. I think this might have been a custom.
Yeah.
I don't know. You'd have to double check. I think this might have been one that Rhonda and I created when she did the QuickBooks webinar.
I have no clue what that.
I think this may be a manual entry field that we put in here, because if you are paying your payroll out of QuickBooks, you can expense it to the expense account and then throw the impound amount, which we're going to talk about the impound or accrual accounts here. I think that's where we're throwing them all in. I don't know, Rex, get back to me on that one if you know what that, if we get any more information on that one.
Yeah.
I got a quick question before you go any further. On the payables notes, using that car as an example where you'd be paying some principal, some interest.
Yeah.
That's not always easy to tease out. Is there another way of dealing with that? And then at the end of say at the end of the year, you could do an adjustment that would compensate for that interest, where you would get that year-end calculation?
So you get a statement at the end of the year that that tells you the total amount of interest you paid and the total amount of principal?
Yeah, so you're not trying to deal with it on a monthly basis, because they don't always tell you on a monthly basis.
You certainly could write the entire check to the liability account, and then at the end of the year when you get your statement, just do a journal entry back out of the, increase your liability account back up and put the difference into the expense at that point. But it would give you a false look at where you really stood on that loan during the course of the year.
Right.
Now you could create an account that was just called, payments made to auto, and just track the total amount of payments, and then at the end of the year disperse out of that and into the two. But again, I can't think of any loans that I have that I don't know how much is going to principal and how much is going to interest. Certainly, your mortgage amount is always clearly spelled out, and my auto payments have always been spelled out. So I'm not sure why you wouldn't be able to know that, but if it wasn't that important to you over the course of the year, you could certainly do it that way.
That's true. You're right. On vehicles, on auto loans, you actually don't always have that kind of detail. What I would do is I'd do a guesstimate. I would get as close as you can, and actually, frankly, that's how I did this. I actually had payables out for each vehicle, Walter, and I would guesstimate that out of a what was it, a $382 payment, that, what was it, like $325 of it was for the principal and the rest was for the interest. And then every quarter I could go back in, and if I just need to make an adjustment, I could just make an adjustment. That way I'm close enough. I'm close enough to, and again, it kind of goes back to those prepaids that we talked about. You want, instead of just taking it all out of the notes for the whole year, which you could do, your profit and loss wouldn't reflect exactly how much you're actually paying every month in interest, which is an expense. So, yeah, exactly, Rex. There's, a little bit of, yeah, it's a little bit, Walter, I agree with you. It's a little bit nebulous if you don't have that kind of detail, but you can always ask for an amortization schedule from your, who the loan's from. Yeah.
Give it to you.
Yeah, exactly. Yeah, right, legally. That's a great one. Great question, though. Thank you very much. Let's see. So let's jump down to savings plans, and this is all related to payroll. Now, savings plan is when you run payroll, you may have a deduction from your employee's paycheck for a particular savings plan, and it could be a pre-tax or a post-tax savings plan. The reason why there's two different accounts here is because in the payroll section of the program, it's got two different fields, either pre-tax or post-tax, after-tax. and it just throws them into two different buckets. That way, if you're paying two different companies, that's why they actually have their separate accounts. And then when you go to write the check every month or every quarter to that savings plan company that you have, the money is taken out of here. And this is on behalf of your employees. This really isn't typically in here, this isn't money you're paying. It's money that you're actually holding on to. You're the little trustee of their money out of their paycheck until it gets remitted to the savings plan company, whoever you guys are using. You know, it could be anybody really, Fidelity Savings or whatever. Now, similarly, this is another accrual account, or I call them impound accounts, or withholding or holding accounts. And then, again, we're tracking money. It's our employees' money that we have taken out of their paychecks. We're just holding on to them. We're being the good person, the good Samaritan, holding on to their money until we pay it in essentially the 941 payment. So that's how that works. Again, this is all auto-populated. This is filled in every time you run payroll automatically in the background through setups in the employee record. You don't have to manually do any of this. And really, same thing for Social Security and Medicare. It's a holding account for the employee's contribution to Social Security and Medicare. Now, FUTA and SUTA are a little bit different. This is an accrual account because we may not pay the federal unemployment tax every time we run payroll. We may hold on to it for a month or a quarter. So what happens is we are accruing the amount that we are contributing on behalf of the employee, because, of course, employees don't pay for unemployment insurance tax. We expense it to the expense account. For example, FUTA goes to the $60,430 account, expense account, the $60,000 account. But at the time that we expense it, again, because we expense it when we write the paychecks, and again, to keep us in line with our profit and loss statement, we throw the amount in this holding account, in this accrual account, until we actually, again, write the check to federal unemployment or write the check to state unemployment insurance. Now, this state income tax, again, this is the employee part. This is similar, actually almost exactly the same as federal income tax, but this is all accrued by your employees, and if they have local. And then if you, in some states, you also have disability, which again is an accrual account. Now, the flip side, just like the unemployment tax, we also have your portion of Social Security and Medicare. Now, again, this gets put down on an expense account under the $60,000 account. This is our payroll taxes, our half matching Social Security and Medicare. But again, it gets piled up in here waiting for us to make that 941 payment. However, our taxes are expensed every time we run payroll in the expense account. Sales tax kind of works the same way. We are collecting money. We're trustees of all of our customers. Every time we close an RO, it throws money in the sales tax account. Let's take a quick peek at this one. I'll hit edit. Oh no, actually I want to look at this one. Look at this. Look how little these transactions are. 79 cents, $5.88, 99 cents. Here's a big one, $395. That's in sales tax. So you can see we do that. I mean, all day long we put money into this account from every single RO that we sell. Okay, and then when we make our tax payment, you write the check and you take the money out of this account, and that's what you're posting your the transaction to when you remit your sales tax payment every month or every quarter. And we have them broken out by state, resale, and local. And you don't have to break these out. A lot of people just gather it all in the one single account. But if you're in Canada, or if you, for some reason, have two different taxing authorities, like in Colorado Springs we did. We had one went to state, the other one went to city and county. You could break it out in there if you wanted. You know, if they're all paid at the same time, you might just want to leave it all in the same account for simplicity. Any questions on the sales tax impound account? You know, same works for franchise tax. Tire fees that you collect out of every single RO that you sell a tire on. If you have to remit to the state, the $1.75, I think it is. And in fact, Jennifer and Tony, I think you guys would know this in California. Don't we have to do $1.75 per tire sold remitted to the state?
Yeah, we do.
Something along those lines? Yeah. So you can impound it there. So it's a different, and again, you have the ability in the default account postings to tell it where to go to this general ledger account. Any questions on that? You know, interest payable, mortgages here, notes, these are all just more impound accounts for the monies that you owe other people. This, again, is just essentially loans, loans, loans. Now we kind of got through the liability accounts. So like I mentioned, the capital accounts are pretty teeny. You usually have just your opening balance equity, you know, and this is, I only have one in here because I put in a fresh system in February. But every year, you're going to have a retained earnings entry, and that's going to be a capital account. It's going to have a dollar amount here, and that plays into your balance sheet when we talk about what's the value of your business. And that's important if you're going for a loan or if you're trying to sell your company, or also just to see how the heck you're doing as a management report. Owner draw is sole proprietors just deduct from this every year, and then at the end of the year, under your accountant's guidance, you can make a transaction to retained earnings out of this account. Again, these accounts right here, I'll tell you right now, if you call anybody up at Scott Systems and you start talking to them about these 4 accounts, they're going to be, you need to talk to your accountant, because these are all handled depending on what your business structure is. Sole proprietor, S Corp, C Corp, shoot, if you're a publicly traded company. So this would all be, tracked and managed according to how your CPA tells you how to manage this. A lot of the, well, of course, the retained earnings are automated, but like I said, there's not a lot that you have to do here, and most sole proprietors just write their checks to owner draw. So pretty self-explanatory there. Any questions on capital accounts? Luckily, there's only 4 of them right now. So now let's buzz very quickly, and we talked a little bit, I think, Tony, this is a great example you talked about how we can slice and dice your income accounts. And essentially, it's simple. Every time you close an RO or a parts invoice, it tracks your sales here. And it's divided up depending on whether you're selling parts or labor, and you could do as simply as just parts, just labor, and maybe just hazardous waste if you don't do supply charges in your state. Or you can break it down, well, actually, you probably always have to have cores, or you can break it down into collision parts, tires. As we were talking about, we could have labor. So we could have labor broken down into diagnostic labor, tire labor, lube labor, maintenance type labors. And the reason why you may want to track this is to be able to get a gross profit number by simply taking the income number, minusing the expense, the cost of goods, which is different from expense, sorry guys, to get a gross profit for that slice of your company. That's why so many people break this down. Any questions on that? One I wanted to highlight here, sales miscellaneous supply. In most states, not California really anymore legally, most states actually charge a supply charge, a flat, 5% or 3% or whatever it is, based on parts or based on labor sales, up to a cap, like $20 or $30 or whatever it is. And those sales are tracked in here. Now remember, the offsetting side of this sale, just like parts, the offsetting side is cost of goods sold parts. The offsetting side of your labor, sublet, is your cost of goods sold sublet. The offsetting side of your miscellaneous supply charge, of course, is your cost of goods sold miscellaneous supplies. Now, if I look at this one, you'll see that this will trickle in. This trickles in because I do have a supply charge set up on my system. So every time I close an RO, it collects a little bit of money in sales miscellaneous supplies. Now, the offsetting side of that is the cost of goods. And this is interesting because you'll notice this is just a few charges. And you may only have like 3 or 4 charges a month where you may have a $100 supply charge or $150 supply charge, $70 supply charge, because you buy it in bulk and you get essentially reimbursed for it. It's kind of what it is when you charge a supply charge on each RO. I hope that adds a little clarity there. So we're pretty much buzzing through the sales. Let's talk about some of the other income accounts.
Yeah. On those miscellaneous supply charges, what kind of things do you see put in there? Or what kind of things are we allowed to put in there, you know, or from your experience?
You know, well, see, you guys are in California, so they don't technically let you do that. Remember how we used to just do a flat percentage? No big deal. We had a cap, and what happened is because luckily we've been audited. We're so lucky twice. That the Franchise Tax Board in California essentially used to say, as long as your sales weren't exceeding your cost of goods for miscellaneous supplies, I think, tell me, Walter, what was it, like 20, 25%? Essentially, they didn't want you to profit.
Right. I don't remember them setting a percent. They simply said if you made money, you had to report it as income.
And typically, Tony, in our business, we pretty much would have a wash there. We really would come pretty close to, we weren't actually making a lot of money on supply charges. Well, as you are familiar with our industry, a lot of people said, man, oh man, do we have an opportunity to make some cash? So California said, BAR, Bureau of Automotive Repair, said no more flat supply charges unless you itemize it. So essentially, I have seen, and this is up to you, and you got to read the BAR code to make sure, BAR code, that's kind of funny, but the Bureau of Automotive Repair policies and procedures for that. But if you were to charge a miscellaneous supply charge, you might want to put in your RO, for example, let's say a note field. Let's say we could create or a labor. Let's say we created a labor code and we called it miscellaneous supplies. And of course it's going to be $0 or whatever we're going to put in. We'll set it up as $0. But you might want to, itemize down here. It could be anything from, brake clean to carb cleaner, regs. I mean, it really, what's that blue stuff called, Walter? We got the anti-squeal.
And your sealers.
Sealers. We were actually in,
Sabrina?
Go ahead. Yes.
Wouldn't you take and do this as a part with an extended description, because then you could decide as you purchase things whether you wanted them to go into that pool. Then you could manage whether you were making or losing money.
Right.
Now, you could do that, but if you were to make it a part, you are tracking parts as inventory. And yes, I've actually seen a lot of people do that. But for simplicity and for accuracy's sake, I would create my own labor code, put in all my stuff in here. This is what I would do. We're going to call it miscellaneous supply. Need something in there. Whoops. Typing queen. Is I would give it its own product code.
Okay.
Because we only have to do, because it's a labor, and we add a product code, and if we called it, and Rex, please, you're unmuted. If you're making comments in here, please jump in if you have any ideas here. Let's go in. I'll show you why I would do it this way. Is that I only have to worry about the income account, and I would create it specifically for this as sales miscellaneous supply, only for this one absolutely individual labor code, right? And I would select it just for this, miscellaneous supply, just for this. Again, I called it a miscellaneous supply labor code, right? Now, I'd leave it 0, or I maybe, I don't know if I want to put in a flat amount. I could do, let's say, I'm always going to do $15. I don't know. Whatever you guys want to charge. And, of course, you can edit it. So whenever you add it, it's going to go to the income account, and you can change it to be whatever amount you want, for example. And there's a description in there, too, so you're meeting all the legal requirements of all the stuff you used, and you can edit it, by the way, if you want to say you did use some stuff or didn't use some stuff. But, Walter, the way that you could see your profitability there is every time you purchase a supply, you're restocking it, and it's going to a cost of goods. So just like Tony does these reports, she manually puts in the total from her. She could put income, miscellaneous supply, and then manually put in cost of goods, miscellaneous supply on a monthly basis to get her profitability on supply. The other part of it is the taxability of it, but we can make this labor code taxable. You know, I've had a lot of people go different ways on this. My feeling is that supply is actually tangible property.
Right.
Does it need to be taxed? Yeah. So let's, where did I jump back into there? If I go into that labor, I go into that miscellaneous supply. And no, I don't want to. Sorry, I didn't mean to do that, guys. I'm going to hit edit to get to the master record, and I can make it taxable. Okay?
Definitely have to make it taxable because the state has said it is absolutely tangible property.
Yeah, that's what I've heard in California too, but I'll be honest, there's a couple shops out there around the country that says that they have been told miscellaneous supply is not taxable in their state. And I am not one to argue. I'm one to say you do what you think the law says. Again, everything I'm talking about in this webinar, these are just guidelines, but you still have to look towards your local laws and consult with your CPA or your accounting counsel to make sure that this is going to adhere to the laws in your state, because we can't really be responsible, or not, we don't take responsibility for the laws and making sure that what we put in the system applies to those laws. We just show you guys how to customize it. So that's what I would do, Tony, is I would probably itemize it. But, you know, I'll tell you, there is more shops than I care to number that still charge supply charge in California. They just don't do anything about it. But I strongly recommend you putting some disclaimer there. And I was about to say, we also were in a shop 2 weeks ago, Walter and I, and they actually had a sign up, a huge sign, you know, real nice metal painted sign that detailed what is a hazardous waste charge, what could be included, and what is an example of miscellaneous supply. And what would you guess, Walter? There were 30 items on that miscellaneous supply sign?
Yeah.
Yeah. So that was actually kind of interesting. I thought that was well thought out. It was actually at a franchise, so I think that they, you know, are trying to nip that one in the bud before they get in trouble about it. But that's definitely how I would handle it. Create a labor, make it taxable, send it to that one individual income account, and then, like I said, we're going to have a great customizable report that you're going to be able to look at profitability by profit center, get a profit and loss by profit center, either by a general ledger account number or product code. I'll have to double check and see what that is. I haven't actually run it yet. So that's a little bit about that. We're almost wrapped up here, guys. So we talked about miscellaneous supply, breaking down labor. Hazardous waste, of course, is charged every time you close out the RO. It dumps it into sales. Now, again, expenses on the other side for hazardous waste is put at the $60,000 account. It is whenever you have to have your filters and oil hauled away. Most states actually have to do that, Derek. I know you guys probably get paid. We did. We got paid for our waste oil, actually, for using it in furnaces. But any hazardous waste fees that you have, you expense to a $60,000 account. And then as you go through, all these are just different sales accounts where you track your income. Some shops, actually I've seen this, Tony, you guys may be familiar with, they have, in addition to the liability collected by the state, the $1.75 for each tire sold, some shops will also charge another $1.75 tire disposal fee. And the reason why they want to charge that and get money for it, because they have a $60,000 account, expense account for having to have those tires hauled away and shred. So it kind of goes all the way down the line, all these different sales that you could have. I even have one created for technical services because we charged if we had to call the AC Douglas tech line, or we charged if we had to access our Identifix online repair information subscription, because that's an expense. Again, anything that you have in sales here, you probably in most situations are going to have a corresponding expense. So a couple more income before we jump down to cost of goods. This is an interest earned on any of your investments that's done at your bank reconciliation. If you charge like maybe a $25 return check fee, that's considered income, and that's also done through the Reconcile bank account. Finance charge, you can charge that on your accounts receivable. So that's where you post that, and that is done automatically in the system. It directly goes in here every single time you have a finance charge entered on one of your customer accounts. Purchase discounts. This is a creative one. Walter and Rex, feel free to jump in on this one. If you discount a part on a restock parts ticket, they actually consider that as income. Personally, I would enter in the price that I paid for the part. I would never enter in a purchase discount. Do you guys want to chime in on this one either way to see how you would want to handle that?
Yeah, I'm in agreement with that.
Actual part. How about you, Rex? Rex, you might be on mute.
I'm on a chat with somebody. I'm not even paying attention. I apologize.
Okay, no problem. Did you have any thoughts on income purchase discounts? Like I mentioned, they actually, if you actually discount the part in a restock parts ticket, they actually consider that an income. Whereas I always just put in the exact amount of the part, of the price that I paid for the part. Any thoughts on this line?
I've seen it done both ways. I've heard accountants want to see it both ways. It really comes down to a personal preference thing. You know,
Personal preference?
Yeah.
Okay. Okay.
If you want to break it out that way so that you can see it, I mean, if you purchase something, maybe an expense or something that you get a discount, or if you get a discount for purchasing large quantities of it, you may want to put the final price on, or you may want to put it in as your actual cost on it and show that discount as an income to you, so that your cost on those parts looks higher, and therefore you can mark it up higher. True.
Good point. Derek, did you have a question on that one?
Yeah, could you use that as a possibly like a rebate? Like if you, like we just purchased a Motorcraft engine, and for the month they had a $200 rebate if you filled out the paperwork and sent it in. Would that be something that you could use that to?
I don't see why not.
That's a good idea. That is actually a good idea. It's so funny because I have another Derek up your way that I just did that with last month, and we actually, frankly, he decided that he was just going to deduct it from his cost of goods sold. But that's exactly where you would put a rebate. That is exactly. So when you do a go ahead.
What if you were getting 2% back on your purchase or purchasing on time? Would you put that here or in another spot?
That would be here, actually, and it's automated. If you get the 2% discount for early payment, which we have that ability to set up in the vendor record, the system in the background, excellent question, Walter, in the background, the system automatically puts that in here. Because our cost of goods, remember, we've already put it down as cost of goods. Our parts cost us $1,000. But when we actually go to pay WorldPack, we actually don't pay them $1,000. Well, actually, WorldPack doesn't give us a discount. But, you know, you would actually, let's say you pay them $970. That $30 difference would post right here. So good one. Very good one. Good clarification. Income bad debt recovery. This is, so of course you guys know, if you write something off to bad debt loss in a $60,000 account, and lo and behold, they come back and they give you the money. How often does that ever happen? It's actually happened like once or twice in my whole life. Again, this would be a non-invoice cash-in, post it to here. These are, you know, kind of the interesting ones that you don't use very often. But if you do have that interesting money come in, like I love that, purchase discounts or a rebate, exact same thing, that goes through the money bag, the cash drawer, non-invoice cash-in, and you remember you'd have to go under Setup, Default Account Postings, and create an entry and post it to this GL. Very good one. Okay, now the simple stuff. We're just down to cost of goods and expenses, guys. Home stretch. Thanks so much for hanging in. Now we know automatically as soon as you post an RO and pay it, as soon as you close it, it moves the money that you have in your asset for inventory parts and moves it down to cost of goods sold for the amount that you paid for it. So that's what flows in here. Same thing for collision parts, tires, same thing for cores as well as sublets. Now again, miscellaneous supplies, we just throw chunks in here every once a week or twice a week when you guys buy your miscellaneous supplies from Wabco, or if you guys don't itemize out your nuts and bolts and washers. That would be another thing, Tony. I've seen people do a separate charge for hardware. I've actually seen that too, which of course you have to mark that as taxable. But again, put it as a labor code. That way you're not inventorying parts in and parts out, and who really wants to inventory 2,000 nuts and bolts every month. Same thing, I worked with a gas station automotive repair shop in Berkeley, California. We had them set up for cost of goods fuel. And they actually did just one transaction a day on one parts invoice a day is how they handled it to track their fuel station. Cost of goods sold others, this is just to give you some flexibility if you want to create any other cost of goods accounts. And for example, I created, again, like I mentioned last week, a cost of goods account to track the costs of used cars. Now this shop would buy a used car, and then when they sold it, their income would be sales, comma, used cars, and their cost of goods, because we actually entered those cars in as a part and gave it its own product code to have the inventory of the vehicles tracked in its own 10,000 account, its sales tracked in its own 40,000 account, and its cost of goods sold every time you sold that vehicle, because we treated it like a part, under its own cost of goods sold account. Now, inventory adjustments, this is just for when you guys run your physical inventory, or remember I showed you, we lost a seal. Remember we said we adjusted a seal or something out of inventory, so it adjusted it down. Or actually, no, this one was down, right. So as you do inventory adjustments, you are continually, and it's a cost to you guys. If something gets, a grease goob and you can't return it to the vendor, well, you just have to throw it away or adjust it out. That's a cost of goods. So when you go into that part record and make that adjustment, it shows up here. Takes it out of 13,000, throws it into 56,000, which we do separately than this cost of goods because we want to kind of track how often we're actually losing stuff, because it gets lost, it grows feet, like it's a set of tires. We have that happen usually once a year, and they usually walk out the back door, that kind of thing. Inventory valuation balance. I actually don't think I have anything in here. No, I don't. This is a system account that you really probably never have to worry about, but the system does averaging when it does valuation of parts in stock. And if it gets off by a couple of cents, it often gets posted here. And most shops never even see anything happen in the system. But this is an automated account that you never have to worry about. And now we're back in the home run to the 60,000 accounts, which is the bulk of this list. But here, this is just how you can break down all your different wages to all your employees. And this is all automated through the payroll feature. They all populate here automatically. They all flow in here whenever you write a paycheck. Same with these payroll deductions. They fill up these own health. If the company is paying for part of the health insurance that goes here, again, savings account would be like an employee-contributed health insurance program would be up in the impound accounts, in the 20,000 accounts, not in the expense accounts. This is what we have to pay for, the shop has to pay for. If we offer dental insurance, we pay for any other benefits, maybe 401k matching, that could be one. And then, of course, remember I told you, when you write a paycheck, remember we have the impound accounts. This is the payroll expenses side of those transactions I was talking about. This is all entered in automatically. You don't have to worry about any of this. And pretty much almost every account from this level down is just stuff that we write with a check. We pay for advertising. We pay for all types of expenses. We write with a check. Bad debt loss is something we actually create as a credit in a customer record to clear out an amount that we're never going to get back. We do a manual credit. Let's do one real quick. I want to show you guys to make sure everybody's familiar with that. And we'll be wrapping up here in about 5 minutes. So I actually, let's say I'm never going to get, let's say I'm going to get some of this money, but I'm never going to get this $520 ever. I just know it. So I'm going to write a credit, create new credit. And how much was that? $520, $590? I don't remember what I said. And I'm crediting back this person in its bad debt loss. So I'm going to either hit Tab or the Add button, but if I hit the Tab key, it brings up the disbursement window automatically, and I'm going to select, I'm going to type 6 is progressive search. It just gets me in the ballpark. And then I'm going to scan down, or if I remembered it, which I didn't remember it off the top of my head, I could have just kept typing it in. Here's my bad debt loss. So that's how bad debt loss gets into the expense account. So save and close. Okay, so then I would tag and pay that off, right? And now let's see how that showed up on our chart of accounts. Is that 603, I think? Or close. 609. So when we double-click on it here, you can see our expense. We're now up $590 on this expense because we're not going to get that money back. So pretty much everything else here, though, let's see, consulting, contributions, any kind of, charities. This is all, you're going to write a check for this stuff. Oh, by the way, here's the other side of those depreciation accounts, the expenses. Remember we showed those right under vehicle original value, 1 and 2, machinery equipment. That's where the other side of that depreciation goes to. It's an expense. Hazardous waste charges when you guys pay to have your stuff hauled away, any taxes you pay, any tire disposal fee when they haul away your tires. Look at more depreciation accounts, by the way. Remember all those? And then we have this whole grouping of financial. There's some stuff in here that actually is automated. Financial credit card discount. Actually, this is when you reconcile your bank account and they take out, at the end of the month, they take out, I don't know, $800 for your credit card processing fees. That's where you would do a bank account adjustment in the bank account reconciliation, and you would select credit card discount. This is an expense. Interest paid, again, Walter, that would be like for the car, where you would put in that portion of the car payment. Financial return checks. This is another one that's done out of the bank account reconciliation. There's an automated feature in there that when you get charged by your bank for a return check, you actually get to expense that out, and it's done through the bank account reconciliation automatically. Bank charges, again, you do once a month when you reconcile your bank account. Financial sales discounts. This is one, I love this one. I get calls about this one all the time. When you discount a part or a labor or a complete RO, when you're writing an RO, this is where it shows a discount. Now, some people will look at this and they will flip out. Now, this is a really small one, but I'll have people that say, oh my gosh, my financial sales discounts was $7,000 last month. That is a marketing ploy, really. It's just what it's saying. Of course, your income is going to look $7,000 more, right? And then if you discount your RO 10%, 10% military discount or whatever you have, it's going to show off as an expense down here. Now, a couple of things I want to say about that. If you are truly discounting a product, you want your customer to know that. You want to know that you're giving them something. So I believe in doing the sales discounts, number one. Number two, some people like to do a lot of sales discounting because it makes their overall gross sales numbers look better. So there's a couple of different strategies here, but it's all smoke and mirrors because the bottom line is still the bottom line. So I wouldn't worry too much about it. Any questions on that, guys? Any questions on this sales discounts account?
Yes, Sabrina?
Yeah.
Hello?
Yeah.
Can you hear me? It's Tony.
Sure can, Tony. Go ahead.
My question is there a way that you could break that down so you've got the discounts that apply to tires compared to the discounts that, relate to repair?
I have to say, when you were talking about that, about how you figured that out to make management decisions, I was kind of wondering how you calculated the discounts.
Amount of discounts regarding the tires, so I just kind of fudge it a little. But
that's a great question. No, right now I don't have anything in the program, unless you're listening, Rex, that we have to accomplish that. But that's an interesting concept. That's an interesting concept. I'll have to check to see if anybody else is asked to be able to see. Well, first of all, labor sales discounts versus part sales discounts.
Right.
That'd be kind of interesting. Yeah,
tires.
Let me do a little. Tires, and maybe we could direct that by product code. I don't know. Excuse me. What was that?
If you could do it, if you could tie it some way to product code, that'd be awesome.
Right, and we could have maybe a financial sales discount RO, financial sales discount by product. Yeah, that's interesting. I'll investigate that and I'll get back to you.
Okay, great. Thanks.
Yeah, absolutely. And I'm going to say specifically for tires. Okay, got a note down there. Now, you guys know the difference between sales discounts and warranty discounts. Now, where stuff flows into warranty discounts, which I think is a fantastic feature, you know, kind of along the same lines that you're talking about, Tony, being able to break it out by tires, is when you're in an RO. And you are, let's say you're going to discount the labor on this oil change. And maybe, I don't know, because we didn't tighten on a filter all the way and all the oil drained out and it came back right away and we had to redo it. The thing is, we can check this box that says apply warranty discount, and it'll discount it out 100%, and it'll track it differently. This is regular financial sales discounts, what I call the whole marketing smoke and mirrors. You know, if we want to show the discount, I'm going to give you a 50% discount here. Or if we know it's specifically because of warranty, let me zero this one out, I would check this box and say this is a warranty because we blew it. It's not a good faith, you know, just a good business sales discount. It's because we have warranty. And this is very handy at the end of the month to see, am I getting a bunch of comebacks? And if you are, and if you're looking at that expense number and it's looking pretty high, then you know you probably want to go look at your productivity reports and look to see, okay, who worked on that job and how many comebacks is he getting?
That's good.
So that's a pretty important one. So that's why I love that feature. It's actually one of my favorites. But I got to tell you, it's so fun to get those calls when people are, oh my gosh, what's $7,000 in this expense? It's kind of funny. So AR discounts is, of course, if we give people if we give our customers a discount for paying their bill early. Let's say they pay it by within 5 or 10 days or whatever, you give them 2% discount or 5% discount. And that's an expense to us, but sometimes it's worth it to get our cash flow coming in, right? So same with these are just other financial, an account that you can use customizably anywhere. And the financial overshort. This is used, again, yes, with the money bag. If you guys are doing your daily sales and cash flow report and you're off and you want to make sure you're tracking it by the penny every single day, you can do a cash store transaction for either non-invoice cash in if you're over, or a cash payout if you're short by 20 bucks. And that cash store transaction would be posted off to this account. And it is amazing, though, how the money does always seem to show up. I don't know why that is. Again, I created this one. This is when I did custom fuel for customer vehicles. I created that so I could do a cash payout for the infamous customer that says, well, when you drive it for a half an hour, then it starts, you know, hesitating or bucking, and then they show up with their vehicle on E. So, of course, you got to put all this fuel in their vehicle to just test drive their vehicle. So that's where I put it down. I created a custom one, and that I pay for with a payout. And then, again, pretty much, guys, pretty straightforward here. We have all of your insurances. You know, Rex, do you have any comment here on this inventory loss number 64500?
Only for, again, accountants who don't like to see lost inventory expense under cost of goods sold.
That's a good point. That is a good point, because it kind of, depending on how you're looking at it, skew your gross profit numbers. If you're, because that's more a kind of a business expense. So would you just do a general journal entry?
Well, you could do that, or you could just make that your default account for your inventory adjustment.
Exactly, and that's done under setups under default account posting?
Yeah.
Okay, very good. And then, of course, just more expenses, guys. Everything looks pretty much straightforward here to me. Mail, any maintenance bills that you got, office supplies. Now, again, I've seen people, this is a good example, I've seen people under utilities break this out to electric, like I did. I think I broke it down. Well, maybe this is default in the system. You could break it down electric, gas, alarm, cell phones, pagers. You know, you could break down your utilities just, you know, every teeny tiny little bit. So you have just a lot of flexibility. The only thing I try to always remind people is to try to follow the numbering convention so it makes sense when you're making up these numbers. And then I'll just tell you, I just think we should take this one out of the system because I know from IRS audits that nobody ever wants to have anything under miscellaneous expense. So that's just my plug, Sabrina talking to you guys, not Scott Systems, that if you got anything in miscellaneous expense, move it off to something that is IRS worthy. It's a good holding. It's a good holding spot. But, you know, I just know people look at that and think, huh, what exactly is that? It's the first place they always look. So, guys, I hope this was useful, informative. Thank you so much for hanging in here for a 2-hour webinar. And, yeah, Tony, go ahead.
Question. The inventory valuation that shows under cost of goods,
Yes.
is that a manual posting? When steps in there, is it us manually bringing our inventory back in line with our general ledger, or what? How's a number getting in there?
Did
This
you
is
say
getting
inventory valuation or inventory adjustment?
No, inventory valuation.
Oh, the inventory valuation balance. If I'm not mistaken, that's the tricky little function in there where if you purchase a part for one price and they're carrying it in inventory at that price, and you return it and they give you a refund on that part for a different amount than what you paid for it, higher or lower, there's a differential in there that you know, what is that? And so to keep it from throwing it out of balance, we throw that differential into that account.
So you do it?
Yes.
Okay, because you know, like each month I compare my inventory to my general ledger, and it's always a little off. Not like it used to be.
Yeah.
Sure, craft.
Yeah.
Closer down. I didn't know if that's where I was to adjust it, or...
You can, but typically any adjustments to inventory that you do, you just throw into inventory adjustments to 56,000. But what we were seeing back in the MaxxTraxx program was that was creating a problem with people's balances.
Right.
And the system didn't know what to do with it, and so it just kept sort of spiraling out of control because it didn't have a way to deal with it.
Right,
So
okay.
to sort of tighten that up a little bit. It's not perfect. Anytime you've got an averaging, a cost averaging system, you're automatically imperfect.
Yeah.
And, you know, you got rounding errors that will never go away, and they can be large or small, but usually they're fairly small.
Okay. And another quick question, in that restock area where you were showing being able to post to miscellaneous supplies, is there going to be an area in there where you can also post, because like right now, if we've got on an invoice.
Oh, Tony, you cut out there for a minute.
Okay, on the restock ticket, you were showing where you could post a miscellaneous supply, which I have not done, but we do have.
Oh, Tony, when you just went to say we do have, you just cut out again.
So when we have an invoice that has something that has to be posted to shop supply, is there a way we can do that if it's on that restock ticket in the same area instead of having to go out to the vendor and post it?
Yeah, you actually, let me go into there really quick. And I thought you were going to sing my praises because my big one, which I've been asking for over a year, is small tools. Because I buy small tools, you know, from Napa. And see, I'm throwing this out here, Rex. I'm throwing down the gauntlet again. Right here, I want to put a box here that says small tools. And I want it to flow to the world-famous 68,000 account, which is small tools. But actually, if you enter those in right here, your supply charges under miscellaneous charges, or enter it through here, this lets you actually
come along. Is that a new thing, that shop supply?
No, but you know what? About every year I'm like, wow, is that a new feature? No, it's actually been here as long as I've been using the system too, and I always forget about it. This actually lets you put detail in here, or if you just want to group it all in, this miscellaneous charge here, both those fields, when you post that, Of course, it's going to post to your payables, but but when what it'll show up as on your general ledger, it will show up under this account automatically.
Okay.
So yeah. And you know, I actually wrote a brief. I wrote a monograph, I think a 2-page article or something, about a year and a half ago about this inventory valuation balance account. I don't even remember what spurred the idea, but I will find it for you and I will email that to you, Tony. And yes, that is actually exactly, when you're off just by a couple of pennies here and there, that's exactly where you put that expense. And it can go either way. I've actually seen it go either way.
Okay.
So I will send that to you. Good questions. Any other questions, guys, before we wrap up? Okay. Well, again, your patience, and we have never had a webinar go this long, and we've never had to review something as dry as this chart of accounts. So I really appreciate you hanging in there. Of course, you know, I'm kind of weird that way. I'm very passionate about it, and I think it's a very powerful tool. But please feel free to give us a call if you're ever trying to do any customization. We won't ever advise you on how to do it, but on what to do. But we will show you how to do that. We're always there and can help you with customized general ledger accounts or product codes.
Okay, well, thank you.
I have a question real quick.
Sure. Yeah, what's up?
Are all of these compatible with QuickBooks? If we were to switch systems at the end of the year, would we be able to transfer these to QuickBooks?
Rex, do you want to answer that? Saray, so are you thinking, are you tracking them in special custom accounts right now?
No, we're not, but we were thinking that if it's compatible with QuickBooks, we'd be able to start using this system in order to transfer it to QuickBooks in January.
You know, you certainly can. We actually had a great webinar that Rhonda co-hosted. Actually, Rhonda hosted it. I was her co-host that she did in July. That talks a little bit about QuickBooks and about how you set that up and you match up these accounts to QuickBooks. I'll be real honest. I'm not a huge fan because I think it's a lot easier to accomplish it in MaxxTraxx. I know the initial setup can be undaunting. I mean, it can be a big, scary task. And if your general ledger, which if you haven't been doing your accounting, you can imagine could get pretty, pretty messed up over a year or two worth of transactions. So if you want to give us a call and talk about how we could get your account, again, we won't tell you what to do, but we'll show you how to reset your general ledger if you wanted to do that and started using the accounting in the system as of January 1st. There's just some processes in place that you want to make sure that you're doing, especially with, making sure that where you're writing your checks to, how your payroll's set up, for example, and how you're doing your daily bank deposits, those kinds of things. Once you've got those really dialed in, everything else is automated in the background. It's just getting it set up the first time. And if you don't have a current balance sheet, it seems pretty difficult. But I've worked with a lot of shops that have never really tracked accounting, for decades, and they have finally decided to use MaxxTraxx for their full accounting this year. I mean, and like I said, it's usually a 2-month process to get it all set up, cleaned up, ready to go. But then they draw a line in the sand and they say, for example, as of July 1st, all of our numbers are accurate, and we're going to input beginning balances as of June 30th. And from that day forward, they've been doing great for the last couple of months. But like I said, there's a great video that if you guys want to take a peek at that you and Rocky want to look at, it'll give you all the different ways to do QuickBooks with MaxxTraxx, and it's available under the archive webinars on our training tab on the website.
All right, I'll be sure to look there. Thank you so much.
You're welcome. Okay, Derek, any questions before we take off?
No, not really. I'm going to be having a lot of them once we get going here.
Hey, that's what we're here for. So, okay, guys, I am, as a result of this webinar, going to put together a pretty extensive document that's going to do a description of every single account that we went over, and I'll forward that to you guys probably within the week. I'll email it to you so you have it handy, and we'll have this up on the website under archive webinars by tomorrow. Okay, so we'll see you guys next time. Have a good week.
Thank you.
Bye-bye.